resistance actually which you didn't recognize there?
Down
Mm. Mm.
here.
And after there is another one down.
Oh, here.
Yeah.
Yes.
Now try to put your horizontal line there. I show you something. Not there, the lower one,
Oh,
the last one. No, there was one below. After that one, yeah, that one. Do you see that the market broke that? That was a resistance, right?
yes.
Then the market later broke it. It bought and then later retraced onto the market broke it. It was a resistance. Then the market broke it. It became support, and then later retraced it to the same new support, and it formed an inside bar candlestick formation, and then it bought up to where it is. Do you see that?
Yes. After this
Yeah.
doji two red.
After those doji two, then it sold,
Mm.
retraced it to our new support, gave an inside bar, and that was a good entry.
Yes. I think I lost there because the market. What?
You are not monitoring it, eh?
I was, but I don't know. It came back to the stop loss before going up.
But you had entered, yeah?
Yes.
You had entered a buy.
Not on this one. Not on this one. I entered from here.
A buy?
Yes.
Oh,
So
that was.
this red candle, this is the big one. It came until on the what? On the stop loss.
But you had entered in.
Right?
Had you entered on support? What confirmation gave you a go ahead to buy?
To buy.
Mm. What confirmation there?
Um after here and the market was here, after this kind of doji, the green doji.
Mm.
So
Because after that green doji,
yes.
that was a confirmation to buy.
Yes, so I thought the market will go up more, maybe making more high highs and higher lows.
And
Maybe,
did you buy
yes, I did, but the market came
after
back
the
on,
doji?
yes, but the market
Because
came,
when I see after the doji, it bought, then had some selling, but then it bought still further up before this retracement. And then later, it retraced where that line is. Still again, it retraced there, formed a doji, and then it bought up to where it is.
yes,
Yes, I don't know where your entry was.
it was you see where that yellow, that red candle, the big one,
Mm.
there was my stop loss. I had entered
Then then what gave you the confirmation to buy?
that doji and those candles. I was like the market was going to go up more, maybe until on this here on this resistance, because I remember my TP was here on this resistance here, or it will break it until on this one. But then the market came back on my stop loss before going more up.
Before coming up again, eh?
Yes.
So it was because I'm trying to see the dodges you're talking about previously, but uh, where you entered from, I don't see any dodge there. Unless you mean this one. There are these ones. There are these two, a tiny one in red, and then a small one still also in green.
Sure.
Are those the ones you mean?
This you can see the green doji here. Here.
Yeah, I see it. So you entered there, eh?
After that doji on that next candle.
You entered.
Yes.
I can see
But
that if you entered, yeah.
the market, I was waiting for the market to reach on this, on here, wait, on this,
But then,
on this resistance.
oh, okay. But then, like, your I can see it had moved into profits
Yes.
before this retracement.
Yes.
Yeah, so can you apply trend lines of that bullish trend? Then you see something because I can see that that market had formed higher highs
Yes.
and higher lows.
Uh,
So apply your trend line support and trend line resistance. Hey, Taiwa, how are you?
I'm fine, thank you.
Are you following?
Yes, I am following, sir.
Okay, that's good.
like that.
Hmm?
Chimala.
Uh-huh. So where you entered from, eh?
Yes.
You entered after this green doja.
Yes.
So do you see that the market bought up to your horizontal resistance? Hmm?
Yes.
Up to your horizontal resistance and even just almost to the trend line resistance before this retracement which came in later.
Yes.
Yeah, so um you are you are wrong to overhold. What you'd have done, yeah?
Mm.
There you would have done what we shall look on what we call break even at trading stop loss. Yeah? So we would have break even, whereby to break even, you move entry, you move stop loss um, from from the stop loss, then you bring it to the entry point. Yeah, so if you had broken even, then you wouldn't have got removed with stop loss. But the good thing is that your analysis was in the right was in the right direction.
Yes.
Yeah, so yeah, so yes, so you just have to make sure that, and even I can see that you had missed this good entry. There was this good entry below. Um, so you just have to make sure that you don't. Um, actually, when you do good analysis, even if you just get like two entries, yeah. Okay, I hope you have corrected where the mistake was. Then
So
you've
I
learned about break even. Yes,
maybe to close order before.
maybe what?
How about to close order before if it is in profit and you close it?
No, I want to stick to the risk to ratio of 1. I want to stick to the risk to ratio of 1 to 5. Then, when you see that the order has moved it to 1 to 4, then you can move stop loss to 1 to 3.
Hmm?
Do I believe run I'm confusing about risk trade ratio. Okay, it's like this.
Mm.
You should trade with a minimum of risk trade ratio of 1 to 3.
Mm.
When the order moves in 2 times what you're risking, then you will break even. We move stop loss from where it was to the entry price.
Mm.
Because when you bring it to the entry price, it means that even if you are removed um, with the break even, still will not be in loss.
You let's say that the stop loss was here down and then you move it up a little bit, you mean?
Yeah, you move it to the entry point. You move it where your entry line was.
And then take profit.
Take profit, you leave it in like 3 times what you are risking.
Okay.
Okay, so let's do top down analysis. Don't bring back your screen. Florence, share your screen again. Taiba, did you watch the video I gave you about top down analysis?
I didn't see. I checked yesterday. I didn't see it.
Oh, check again now.
Okay.
Have you seen it? Taiba, have you go to the video?
Yes, it's there.
Ah, okay, that's so you will watch it, but you're going to go through top down analysis here. Yeah, so this is how it is. Oh, Florence, share your screen again.
Okay. Fine.
So this is how it is. Just like I told you, how to do top down analysis. You start with higher time frames. So move. So now go to higher time frame.
Like.
Go to this. So this is how it is. If you are a day trader, um, and you're not longer term, and you're not a swing trader, because swing traders they do hold for more than 5 days their trades. So for day traders, um, the way you analyze is you analyze from D1. D1 majorly, I repeat this, everyone take note. D1 major, we are interested in looking for that trend on D1. So as price action traders on D1, we look for majorly that trend. And when we look at the trend, we also see where the market has reached. If it's on D1, has the market actually that pair which I've been looking on? For instance, I saw was it yesterday? No, I traded it last month. Then it had to come back. It had reached the when you go on D1, it had reached the trend line support, and right now it's creating confirmation that will bring back the buying opportunities, hopefully by Monday.
Buying option.
More buying days.
Okay.
Yeah, okay, so this is how it is.
I move the slide.
Should we do? No, you'll be removing your lines for your analysis. So don't remove them. Let's do like this.
Yes.
So this is how it is. We have two types of traders. We have the swing trader. Swing traders, they do hold um, their trades for days and months. For them, a swing trader, when he's analyzing the market, they start from W1, that is week 1, to see the trend. Then they come on D1 to look for major supply and demand zones. And then after coming on D1 and identifying major supply and demand zones, then they come and finalize their analysis on H4. After that, they then enter their trades on H4.
My question is,
Mm,
you see here now on D1, if you see the market, it is still in uptrend market, right?
it's in what?
Bullish market.
Yeah, but you don't just see that. Is it bullish? Okay, you see the trend and then see where it is. Is it on trend line support or horizontal support?
Okay then, but when you go on the H1, it's like a forward, like it's like any masculine market way you sell. It's like this one is behind.
No, tell it behind, yeah. So wait there. As you see, like D1, it has 24 hours,
Mm.
but H1, which candle is 1 hour, 1 hour, 1 hour, meaning that
Mm.
D1 can have something. D1, okay, like you to have a D1 has a 24 cab H1 candlesticks. So you don't just have to look at you don't, okay, like our major interest is to see what trend is taking place on D1. When you look and see what trend is taking place on D1, the next thing is
Mm.
where is your trend line support and then trend line resistance. After that, you look at the previous day candle. So now try to zoom out your candles. Actually, let's take it in steps like this.
Mm.
Yeah, but I was still trading like the swing traders. They do analyze from weekly 1. Stop there. Swing traders, they do analyze from week 1. Um, and on week 1, they be majorly interested in the trend and how they be interested in like 3 things on week 1. What trend is taking place? Even I believe you are noting this. Secondly, where is support and resistance on D1? Lastly, how did the previous week candle close? After them having answers to these 3 on W1, then they come on D1. So when they come on D1, their major interest is to see where are the major supply and demand zones.
Mm.
And then when they find the major supply and demand zones, then they can go to H4, apply trend line support and resistance again, and then look for trading opportunities. That's how swing traders trade. Then the traders like me, like you guys are mastering to become day traders, we analyze from, okay, like for example, like from next week on Monday, we shall be I'll be resuming the weekly market analysis again. And then when we're doing the weekly market analysis, we do swing analysis. But if it's for your personal daily trading, this is how we analyze. I hope everyone is following very well. We start with we do top-down analysis. Top-down analysis means start from top, coming down. So in this case, we use 3 time frames, and these 3 time frames we use the I first explained to you how swing traders analyze. Now, for us, the traders we analyze from, we use a few time frames: D1, H4, and H1. Taiwa,
Yes, sir.
on which time frame do swing traders enter their trade zone according to what I explained?
Swing traders enter from 4-hour time frame.
Very good. Yeah. So the traders, they will analyze from D1, then we come to H4 and finalize our analysis on H1, and we enter our trades on H1. So now this is how we do it. And I want everyone to note this. On D1, our major interest is the trend. Which trend is taking place? Is it a buying trend or it's a selling trend? Then after answering that, if it's a buying trend, then the next thing is for you to apply your horizontal levels, and trend lines on D1. Florence, are we together?
Yes, we are together, but you can't apply those lines on D1 and D4 and then on H1.
Yeah, that's why. But you can apply them. You can apply them after that. That's why it's better for someone to be using a laptop. But still, even on phone, you can do it. Let me show you how you can do it. First, remove. Don't delete. Come where do we come here? I'm trying to. First, remove that interface for trades.
For what?
First, remove that trade interface. The one that is having sell and buy.
I did.
Now, come on quotes.
Quotes.
No, go back to chart. Just tap anywhere on the screen. How come your phone is not bringing what I want to see? But let me just a minute. Let me check here. Let me see on mine. Do like this, eh?
Yes.
Tap anywhere on the screen again. For Androids, just tap anywhere. That's why for me personally, I have an Android phone and iPhone, but Androids make it very easy for me to trade than the iPhones. So this is how it is. Go to settings. I don't know why. Because on Android you just tap anywhere, then you go to add another window, new window, and then
On the phone?
do you see anywhere where there's
window? There's here data
no.
window.
Data window. First turn it on, I see.
Okay.
Then come back. But I don't think it's that. Tap anywhere. Cancel. So on iPhone, I don't know why it's not. Let me first check on my iPhone here. I see. Settings. Data window. Mm, Oh, huh. Do like this. Come on, trade. Tap on trade.
Here.
Trade.
Here.
No. After chat, there is trade. Tap on the other plus. You increased your demo balance. Oh no, it's 20 that.
No, I was making practice here, and so I made some money.
Okay, first come back on the no, first leave that side. So I've really felt too far to see what I was trying to show you on on iPhone, but on what? On Android, it's there. You can have Android now. So what you do? Okay, come on history. What you do, you will just have to make sure that you get more familiar with the laptop, and then with the laptop it's very easy to have more than one chat. So you can have one chat for D1, second chat for H4, then third chat for H1. Yeah. So um, I scroll, tap on the other arrow, you go to week. Tap on last week. Uh-huh. So what was your risk reward ratio on GBP JPY?
This order nazinze mugasegede.
Zona zingidemo mundi gumu.
Okay, chifu nadunyira benya kulaba nadunyira video genda wano kanenjagala ogezesa.
It's fine.
Yeah.
Also, yeah, but it's not good to enter many trades at once. It can give you money, but then like you'll be maximizing the risk. That's called flipping, whereby you just open many trades at once. So it's profitable. Personally, I've also ever enjoyed it, but then for a longer term success, it's not good. Yeah, so I don't recommend you. Screw up on your other trades.
Sorry.
Scroll down. I would like to see your other trades. Scroll down still. I can see you get out of the market. Um, yeah, so you just the only thing that you just have to do is that your analysis is not so bad. You just have to make sure that when it comes to risk trade ratio, it's hard for traders to stick to the risk trade ratio. But out of experience, what I can tell you is the best way to be successful in this market is making sure that you trade with risk and money management. That's why we have even the risk trade ratio. Yeah, not just trading, scalping. Have a disciplined target and then keep moving on with it. Yeah.
So it's
Okay, for instance, so it's come again.
like, is it okay sometimes to scalp?
Scalp just like you did.
Like sometimes, okay, not every day, maybe like
No.
once in a while.
Even if your scalping is good, you can scalp, but as long as you are having risk management in mind.
Mm.
Because today you have scalped and you made in profits, but then tomorrow you will scalp without risk management, and then traders they will take you into big bruise. And so, I personally don't recommend. Scalping is all about like ending a trade, closing, not overholding. Yeah, yeah. So personally, I do recommend someone to have a maximum of 2 orders, and when it's in the discipline of his or her risk trade ratio. Yeah, that's what will keep you. That's what will protect your capital, and will keep you in the markets. Yeah. Okay, so let's go back to the charts as we move on with top-down analysis. Yeah, so the week moved well, but then you made some. You are trying to test certain things, by the way, which is good. Yeah, you can test certain things so that you can see how the market reacts to them, but then um, you make sure that later you get back to the trading discipline.
Okay.
Okay, so as the traders, we start with the D1 to when we are interested in few things, to see the trend, which trend is taking place, and if the trend is buying, we make sure that even on H1, we're going to be looking for buying opportunities. So after identifying the trend on H1, on D1, the second thing which you are interested in or in D1 is to see where support and resistance is. We apply our horizontal and trend line levels, swing to trend lines. Then after that, we look at how the previous day candle closed when it comes to price action. If the previous day on D1, the previous day candle closed with a bullish candle, it means that the next day, so it closed with a bullish engulfing candle, it means that even the next day, it will be also buying. But if the previous day closed with some scattering wick on the body, it means that the next day it will buy, but it will start like whereby it's selling a bit, and then later it will go into the buying direction. Yes, so the first thing on D1, we look at the trend, apply horizontal levels and the trend lines, then look at how the previous day candle closed. If the previous day candle closed with a bullish inside back candle and it's a buying trend, then we can go ahead and look for the what? And look for buying opportunities on other time frames. Yeah, so on D1, we compare with how the previous day candle closed. We look onto it when in what in terms of price action and then candlestick strength. Was there a rejection? How that candle closed? If it was a full-bodied bullish candle without any wick up, then it means that even the next day it's going to begin whereby it's buying seriously. Yesterday I was having a meeting with another team, and then one of the colleagues told me that for him what he does, um, when the week is closing, he he monitors how the week is closing and then sets up pending orders, and then uh, when the week closes, whereby there is some rejection coming from the sellers
Mm.
and it's a selling trend, then it can place selling orders. Yeah, so when the week is closing with a full-bodied candle, then then it leaves pending orders. Then definitely the new week the market starts buying rapidly, and it makes good money. Yeah, so on D1, HD1 will be interested in the trend lines and the horizontal levels, and then lastly, how the previous day candle closed when it comes to price action confirmations, and also how the candle closed. Yeah. So after looking on that on D1, we come on H4. On H4, we only be interested in supply and demand zones. We'll be interested in supply and demand zones. Yes, so after finding supply and demand zones, it's a buying trend. We have applied our supply and demand zone. Then when the market gets to our demand zone on H4, and then it gives us a buying confirmation. We can take a buying confirmation on H1 because that's a demand zone as we identified it on H4. And then you'll find that even on H1 there will be a confirmation for a buy. Yeah.
But
So right now, yes.
like here now on H4.
Let me check there. A minute. Like where?
On H4,
I'm not seeing your screen.
you not? Alright. You do now?
Now I see it. Yeah. Like where?
Like here now on H4 where the market is now. Now, where can I be applying this on?
So on H4 we look for supply and demand zones. So do you see any supply and demand zones there?
Maybe supply.
Yeah. So where is supply? Apply your line where it is.
Here. So
Where?
here.
Where? I'm not seeing.
Here
Oh yeah.
from this resistance until here down.
Oh yeah. So when you put a line there.
There's too much lines here.
Change its color.
I'm trying to change this one. But there's too much line, but this the yellow line.
It's the
Yellow line, like there's too much line already.
Okay, so this is how it is. When you identify your supply zone on H4, then, but I just wanted to, I wanted you to put like something like a horizontal line.
Oh,
Yeah, so delete that one and then put a horizontal one.
there.
Yeah, so this is how it is. When you identify your supply zone and the demand zone on H4, but currently I don't see any demand zone there, what we do, we come on H1.
You said
What
supply.
Hmm?
You said supply.
Yeah, there I only see supply, there's no demand. So when you come on when you come on H1, let's assume that this market was down and it's approaching this demand zone. So this supply zone, there we wouldn't have bought, would have waited for the market to break that supply zone. Actually, just like when you look very well, you can see that that supply zone was in coordination with the support zone there, which I was talking about initially, which the market broke and then retraced it to it. Do you see that?
Yeah. Yes, here down.
Yes?
Here.
Yeah, that one down. There's a supply zone there. But the market broke it, it became resistance. The market broke it, so it's no longer a strong supply zone. But you can see that the market tried to retrace to it before continuing the other buy. Do you see that?
Here? No, here. There or here down. This one here down. This the.
No, there's this previous one. I don't know, I can show it. This is how it is. Do you remember the other entry which I was telling you, which you missed?
Yeah.
Where the market broke the resistance, then later retraced it to it. Do you remember it?
Here. Let me show you. Here.
Yeah, there. Do you see that that's just that's in coordination with your yellow line?
Yes. Yes.
Yes, so we wouldn't have bought there, but then after the market breaking the yellow line, that would be in coordination with our H4 analysis, and then we would have confirmed that we are no longer having a supply zone. Currently, where this current market is, it's trying to retest this same zone, but
Yes. Yes.
chances are high that it's not going to break it. And but according to according to how this candle is closing, this time is closing, it's likely to first sell a bit, but then rejection is likely to come. Then the market will bounce off from there, and then we'll keep on buying because this has been a strong zone. You can see that it's been tested two times, and currently that rejection is coming because of this zone. I hope you can see it clearly. Yes.
This is to be the third time, right? This can
Yeah,
come.
that is the third time. That's the third time it's testing it.
I can see.
I hope you have got it clearly now.
Yes.
Yes, so that's how we do top analysis. Then, but then we shall have to redo it again. Yeah, but majorly, this is let me repeat this. On this is how it is. On what? Mm, on D1, we'll be interested on the trend, horizontal levels, and trend lines. Then how the previous day kind of closed. Right now, when you go on that pair, which are on, the previous day candle closed with some rejection which was coming from the buyers, and that's why even today started whereby it was buying a bit more, and now sellers are doing what? Sellers are trying to put back the market down. That's because of how the previous day candle closed.
Which candle?
Yes. So
The green candle?
when you go on D1, go on D1. Actually, when you come on D1, you can see that yesterday kind of it sold up to a support zone, then rejection came in, and yesterday candle closed with some rejection from the buyers, meaning that today had to start whereby it was buying a bit more, but sellers had to later come over. And right now on D1, you can see that the market is still trying to retrace back to the support zone. Yeah, so D1, we're interested in how the previous day candle, the trend, how the previous day closed, then the trend, after the trend, then the trend lines and horizontal levels. After that, we come on H4 to look for strong supply and demand zones. After getting those supply and demand zones, then we come on H1. When we come on H1, we apply our trend line. We reanalyze again, apply trend line support, trend line resistance. And when you find that the market is approaching your demand zone, which you found on H4, and on H1, the market has sold up to your demand zone, and then it gives a confirmation you can buy because it was a demand zone which we identified on H4, and then the market has also gave you a buying confirmation, just like that very demand, that very supply zone. This was a supply zone, so it was in a demand. Yes, so
Yeah, there is demand, but it's fine.
So demand zones, we find demand and supply zones. We look for them on H4, and then on H1, there still we just focus on trend line resistance and trend line support. Yeah. So that's how it is, but we shall be realizing more. I believe at least today you have understood something more about top-down analysis,
Yes.
and definitely you will master it. So, Taiwa, have you mastered something today?
Yes, I have mastered, but I have a simple question here.
Yeah, it's fine. You can ask.
So, okay, there are some traders which I used to follow, but I didn't understand.
Mm.
But what you are calling demand zone, others use it to say Maya it is liquidity zone. So, how is it? What is the difference between those two?
Mm.
Uh,
Florence,
Yes.
what have I ever told you about such scenarios?
Um, I for me, I don't remember. Sorry, I don't follow them. Like,
Okay, this is how it is. Mm, Forex trading is wide. The, there's a book that which I gave you. It's called the Candlestick Bible. That Candlestick Bible, it's the genesis of all trading strategies. It's the genesis of all strategies. It's kind of like it's the foundation. It's what um, the Candlestick Bible. It's what other people based on to come up with different strategies like the SMC, um, the SMC, then then a then institutional trading, all those other strategies they came out from that candlestick Bible. And when you look at the candlestick Bible, it focuses on market structure and price action. So, in simple words, price action and market structure are the real are the real are the real content about forex trading. It's just like um, when you look at how the smartphones came, we started with Mapesa phones.
mm,
Then then smartphones came. Yeah, so um, all strategies are many, but then like personally, I mastered all these strategies. I mastered the smart money concept, ICT concept. But then at the end of the day, you find that the understanding is look like the logic behind their concept, just like what you are saying, the liquidity zone. You find at the end of the day, you find that the logic behind liquidity zone is the logic behind demand and supply zones. Do you get me?
yes, sir. Now I have got you very well.
Yeah. Like for example, there are some there are some books whereby you find that they are having chochi, uh, bossy, whereby bossy they are meaning break of structure. Church, they are meaning a change of character. Whereby change of character, in simple words, this is whereby the market was buying and then after it breaking resistance, so where the market was selling, it was a selling trend, but after it breaking resistance, it resulted into a buying trend, meaning that the trend has changed from a selling trend to the buying trend. And when other people calling it change of character. So personally, I do call those things like whereby people came up with those things whereby trying to um, confuse people, but the things are the same. Yeah, and price action, market structure, it's the way to go. Master price action, market structure, focus on risk and money management, manage emotions, manage emotions, focus on risk and money management, keep trading. You see results. But when you try to go and learn it and everything, you find that things are confusing. And at the end of the day, market analysis has to be simple. Yeah? Your analysis has to be simple. But when you have a lot of whereby you're applying smart money concept, market structure, price action, find that you fail to find the good entry. But when you are contented, you focus on price action, market structure, you keep on trading, you'll be seeing results. Just like how I have told you, for instance, that your analysis was in the right direction, but then you had not brought clearly your trend lines. Yeah, so it's all about. So now you have learned where the four tools for your entry. Yeah, so it's all about learning from the mistakes that you make, avoiding them. Keep focusing on what you have mastered. Yeah, you will see progress. Yes, that's it. Taib, I hope now you have got it clearly.
That one I have got, but there is another one simple.
Mm. Which one?
Which means when you go to day one and then you stick to 4 hour time frame, and you stick to 1 hour time frame. When you see they are not get connected, you just first wait.
Aha! Wow! Thank you very much. Thank you very much. You reminded me of something. So this is how it is. Huh? If D1 is a buying trend and H1 and H4 it's also buying trend, when you find a demand zone on H4, so if D1 is a buying trend and the market is far away from resistance, um, when you come on H4, you find demand zone, and then you come on D1, so you come on H1, apply trend line with it. On H1, just make sure that you are also in the buying trend as it's the direction on D1. Yeah, so you make sure that you trade in the direction of D1 unless the market is on a resistance, because they would hope for it first to retrace a bit before continuing the buying trend. Yeah, but if it's a clear buying trend, and when you look at how the previous day closed, it's in support of buyers, then still you keep focusing onto the buying opportunities. When you come on H1 and you find that the market has reached your demand zone and then it gives a buying confirmation, then you can buy. Yeah, so just make sure that before we trade, we make sure that all time frames D1 and D1, H4 and H1 they all align onto a confirmation buying direction. So for instance, have you got it?
Yes, I've got
If
it.
if D1 is buying
Yes.
and H4 and H1 are selling, first just be watching the market, trying to watch it until to when it gets to you a certain support zone on your H1, and then it gives a buying confirmation, which would be in coordination with what is on D1, and then that's when you can buy. But if the all time frames don't agree, then first give the market some time until when it forms something which you can understand and something which all time frames agree with it.
So
Yes.
if you got to do that on D1 and H4, and then you find that the market is not in the same direction, let's say, like on H1. You mean I have to wait? I have to wait for this to match with H1.
Come again?
If I got to D1 H4 to analyze, and I find like these two, the market maybe selling, and D1 and H1 is in buying trend. You can see it already, but these two H4 D1, yes, I have to wait for them to what?
No, then what you do?
Yes.
Actually, D1 it's what monitors. It's what gives the direction of the market. So when you find that D1s are selling and H1 is buying, there might be that the market on D1 would have reached the trend line support And right now it has to retrace a bit to buy it before continuing in the selling direction. Are we together? So sometimes what makes them to be different is that the one might be a buying trend, and then you find that the market reached the trend line resistance, and then retracement has to come. Remember, it's a market cycle. It's a buying trend, but then we can expect retracements, selling retracements. Yeah, so that's how it is. But then when we confirm a retracement very well, and HU4 is also agreeing with that retracement on D1, then you find that even H1 will be giving you clear what? Clear direction. Yeah. So have you guys understood?
Yes, but not really, but I understand it slowly.
Yeah, right now I believe it's about applying it practically more.
Yes.
That's when you grasp it completely. Yes, so we shall be having weekly analysis next week on Monday. You make sure that you don't miss it. Then, yeah, you'll be getting it more further practically.
Yes.
Mm.
Yes.
Okay, I wish you a good weekend, a blessed weekend. We link up again on Monday. God be with you. Good night.
Yes.